What are the best buys in the market right now? Semiconductors are pulling back, memory's pulling back, data centers are pulling back. Michael Burry's basically shorting everything out there. And there's a lot of stuff going on in the markets right now. And you want to know, where should I be putting my money? Where are the best opportunities in the market? Seeing as the S&P 500 is right around all-time highs, and I'm looking out there and it's getting a little difficult to find great deals and great opportunities. We were just talking about how healthcare was beaten down and financials were beaten down and crypto was beaten down and software was beaten down and cybersecurity was beaten down. And all of those have just had a rush of capital inside of them. And so now we're sitting here and I'm sitting here like, where's the deals? But don't worry, because I already went through the markets, I already went through everything, and I found what I believe to be the best deals in the market today. So in this video, we're going to be talking about what stocks they are, why I'm buying them or continuing to research into them, because I do not own all these stocks on this list, and where I think they could be pulling back to and where I would be personally buying using my DCA Optimizer, dollar cost average optimizer, which it literally tells me if I should be spending $100, $200, $300, or $400 every single month when I go and buy X stock. That way I can get the lowest possible cost basis going forward. So without further ado, guys, let's get straight into it. Let's talk about these stocks. Now, all these are going to be pulled off Value Snapshot. This is the Investing Research Made Simple website that I created. If you want access to that, that'll be linked down in the bio below. You can get a 7-day free trial right now so you can try it. If you don't like it, no problem, okay? AppLovin. You guys have heard me talk about AppLovin. And remember, we're going to talk about all these stocks individually, and then we're going to get into where I see them going on the DCA Optimizer. So AppLovin, this stock has been beaten down. It was just $10 a few years ago during the bear market 2022, 2023. And it's rip-roared all the way up to $700 and now down to sub $300 as recording of this video right here. In this company, if you don't know, if you're ever playing a mobile app game, okay? Picture yourself playing a mobile app game. You know how you get these turns? You get 5 turns, and then after the 5 turns, it's like, watch this ad. The ad is put there and magnified across all the gaming apps by AppLovin. And that market's supposed to grow 10%. And I literally just made a video on AppLovin and why I'm so bullish and why I'm hammering the table on it and why I'm buying it so heavily, just like I did with Palantir at 107, just like I did at Microsoft at 350 to 400, just as I did with Netflix just a few weeks ago in the 60s. Like, these great companies get oversold and people don't want them, and the pendulum swings in the complete opposite direction. And that's when I pounce. That's when I sit there and say, yeah, that's not okay. I'm going to go ahead and buy up that because this is ridiculous, okay? This company is exploding on a trailing 12-month basis, right? They've gone from 1.1 billion in free cash flow to 4.5, 1.8 billion in revenue, all the way up to 6.8 billion. And they have 88% gross margins. 88% gross margins. Are you freaking kidding me, dude? 88% gross margins. They went from $1 of EPS all the way up to $13.13. And the reason the stock is down was first it was SaaSgeddon. Then they missed revenue this past quarter, and that's really made it drop. It dropped like 21% in after hours. So these are the reasons that we're down so much, and people fear that the growth is done with this stock. Now, again, I just made a video on it, so definitely go give it a check. It's about a 28-minute video. It'll give you everything and all my bull thesis, why I like the company so much, what they're actually doing and what they're spinning into, not just gaming apps. So definitely give that a watch. I'll leave it linked in the bio below, and I'll also pin it up here or something. But basically, what we have to know is analysts believe the fair value is $529, 77% upside. That's a consensus. If you run an EPS conservative model, $529, same along the lines of analysts. And if you're on a DCF model, it's about $600 stock. So 77 to 101% upside from where we are right now at $298.59. And the reason it's also down so much is because of growth fears. Companies like these grow like crazy, and then when the growth peaks out, and teeters off and they start slowing down in growth, that's where growth investors and some Wall Street, right? They say exit stage left. I'm out of here. I don't want to be invested in this company anymore because the growth story is over. But I don't believe the growth story is over in this name. I think the growth story is going to continue in this name. Definitely not at where it was, but I do believe, like their management says, they're going to be able to do 30% annualized revenue growth into the future. So I really like this company. I believe that it has a moat. I believe that it's positioned very well for the future. And I would not be surprised if this stock doubled before the year end. All it takes is for them next earnings to come out with a blowout quarter and then people to say, oh, wow, okay, their growth isn't dead. And then people pile back into this stock super fast, okay? And so they haven't gotten any of this appreciation from SaaS getting basically being over and all these software stocks running. They haven't gotten that. And then obviously they got beat down after their earnings due to the revenue miss. So they haven't got, any kind of price appreciation. If they come out next quarter and shock the street and basically everybody believes this company's dead or something, and like they believe that only bad negative times are ahead, if they're able to flip that script next quarter, watch out. This thing's going to fly, guys. Number 2, Reddit. Like I said, we'll get into where I'm actually buying these stocks and where are the best spots to be dollar cost averaging into these companies. Number 2, Reddit. I'm sure a lot of you guys know Reddit, and you might have been skeptical about Reddit like I was in the very beginning. And I do not own a position yet on Reddit. I'm trading it currently. I don't own a position yet, but I'm deeply researching this company because there's something here. There's something here. This company has data like Google and Meta. They have that amount of data. Not as much, but a lot of it. They have a lot of data, okay? And with data comes power. It comes a lot of power, guys, because they're able to fill advertising slots with said data. They're able to do a lot of different partnerships. They're able to really define the markets with this data, okay? And so it's a social media app, but there's a lot of people on. I know a lot of you guys know what it is. And they just have a lot of upside here. Not just with the social media app, guys, okay? If it was just about like the social media app, I'd be like, nah, pass. I'm not really a Reddit user and nah, I'm good. It's the partnerships with their data. It's being able to partner with other companies, advertise with other companies, and have that data as one with another company or spin off into other businesses with that data. Like we've seen with Zeta, right? With Zeta's data. AppLovin has data. Google, Meta has data. Like they're able to do so much with data because it's understanding the customers. It's understanding you and me and what we like to go out there and purchase and buy and do. Okay. So I'm starting to really like Reddit. It's at a very cheap discount and the business has just been growing very, very nicely. 804 million in revenue, 2.8 billion in revenue, negative 85 million in free cash flow, up to $1 billion in free cash flow on trailing 12-month basis, negative 56 cents of EPS, up to $4.52, $4.52 of EPS. I don't know why I said it like that. 91% margins, gross margins, guys. Like companies that have these high levels of gross margins like AppLovin and Reddit, and you get to buy them at a discount, if you believe they're going to keep those gross margins, what are you doing not buying these companies? Honestly, because so much of the bottom line goes into their pockets and into our pockets as shareholders. So I have a DCF model, a DCF intrinsic value of 176, EPS fair value of 215, and analysts have a $204 price target on this thing over the next 12 months. So we're looking at about 15 to 41% upside from the current price of this video, $152.63. And like I said, if you want access to these snapshots right here, these are all just done up by AI. You just literally go here, NVIDIA. You can check out overview, charts, financials, valuations, analysts, compare, AI analysis, all this stuff. You can come right here to snapshot. It'll download you it'll generate this snapshot right here. Nice, quick, easy little thing. You can do it light, dark. You can do a full year, trailing 12 month. You can actually edit this. So you can save these. You can share these with friends. You can, if you If you're a content creator, you can post these. Just very simple. And you can change your EPS and DCF intrinsic values based on your valuations here, right? You have all these valuation models that you can run. You can compare all four. It just makes it really easy to run your evaluations, run your analysis, see what the company's doing on the charts and the financials and the fundamentals, all that good jazz. So yeah, guys, if you want to access that, again, 7-day free trial down below if you want to try it. Again, if you don't like it, completely fine. I would love your feedback though if you don't like it, so I can continue to work on making this the best possible website for all of us to use. I love using this website. I built it for me and now I share it with everybody. But anyways, guys, Reddit is starting to look very, very attractive to me. I'm really liking what I'm seeing here. I don't have a position yet as an investment, like I said, but yeah, I'll show you here at the end where I'd be possibly buying Reddit. Number three, SoFi, guys. This is an investment. This is one that I've been talking about for a little while now. This is a company that I really like as not just a bank. I believe it's a very bullish company for crypto. I think it's a very bullish company for home loans and car loans and student loans. And I think this company has a subscription model that they're really starting to get after now and really starting to ramp up. And it's just becoming an everything bank, right? Like you see Robinhood going with their brokerage, and now they spun off, they have credit cards and they partnered to be a bank. Well, SoFi's already a bank. And now they're a broker. And now they're also trying to spin off into all these other things like credit cards and loans and all of it, right? And trading apps, and like they're doing a lot and they're creating this flywheel. And they have a lot of the younger generation on SoFi. And as the younger generation gets older, right, and they start coming into more and more money, or they get money from their family tree, right, as the circle of life goes on, right, and people are passed down money, they get that money and they're already banking with SoFi. And who you bank with, because we all know once you get with a bank, you're typically, especially when you have direct deposit, you're typically not changing it, because then you have to go through and you have to change all of your auto pays and do all of this stuff. And it's a headache. No one likes to do it. I'm still with my bank, PNC, and I just haven't changed it. I've been with them since I was like 18 years old before I joined the Air Force. And guys, it's just a pain in the butt to change your bank. So sticky business model here with SoFi and everything bank. I really like them. 2021 and 26 are DCF analyst targets and EPS, 10 to 43% upside from here. It was just a better buy like a few weeks ago whenever we were like at $16. I think we hit like 15, 14 maybe. So it was just a little bit of a better buy, obviously, but I still think it's a great company, undervalued. And I do think over time they will continue to climb higher. I think the fear with SoFi right now is, are we going to get rate hikes? And if we get rate hikes, SoFi will get hit, right? They will get hit along with a lot of other financial companies. So keep in mind on that. There might be more dip to come, and I'm fully ready for it. And I have some cash lying around to go ahead and buy that dip if it does happen, but it does not mean it will, okay? Number 4, ISRG. So this is Intuit Surgical. Now, this company has been beaten down, okay? And why has it been beaten down? It's been beaten down so much because there's a lot of competitors. And honestly, there's a lot of competitors coming out of China. Well, first and foremost, competitors to what, Ronnie? Sorry. Competitors to their medical technology. They create robots that are able to perform surgeries and have other medical equipment to perform different tasks. And they can do it at like a grand stage, guys. Like, perform surgery on this banana. And it's just like super smooth, silky smooth. It makes things very simple. But the problem was this company was up and away. But then once people started catching wind of China, and China's really good with robotics, and it might be the leader in robotics right now, to be totally honest. And it's like, ugh, they're building these robots are building this medical technology. And we have competitors with ISRG, and they might be able to even sell this stuff for cheaper. That was all great, fine, and dandy. And again, it was just a theory and it brought on negative sentiment. I think ISRG is firmly planted within the US and other countries' healthcare system or healthcare to where they're going to continue to be able to keep those contracts going. One, and two, another big bonus was a lot of their revenue comes from the US. And the US obviously is not going to be kind to competing countries' products like China. So they're going to sit and say, and the government's going to sit there and say, hey, don't even start thinking about buying Chinese products to perform surgery on Americans. You better keep buying stuff like ISRG, Intuit Surgical. You better keep buying their products. So this company's been beaten down, like I said, but guess what? Free cash flow is up and to the right. Revenues keep climbing up and to the right. Gross margins are at 67%, all-time highs. And I have a 525, 515, and then analysts have a $491 price target on this thing over the next 12 months. And that's about 31 to 41% upside from here. So yeah, I like the stock. I think the sentiment is flipping at this time. And yeah, I think they can go back to all-time highs as the sentiment shifts and they continue to come in and beat their earnings and show, yeah, we're not getting disrupted. No one else is coming in here and beating us up. Number 5, Meta. Now, let me caveat this with Meta's a Mag 7, Meta's a Goliath, Meta's a great company, and they have over half the world's population on their apps on a daily basis. Okay. But I think it's undervalued, but I do think there's some rocky waves ahead for Meta. One, they had this brand new lawsuit, brand new investigation into their apps being too addicting for kids. And that's going to be a whole thing, probably going to be a fine, right? And it's coming out of the US. So typically they're getting fined by Europe and all this other stuff, all these other countries that have more strict like data rules and everything. But this time they're really, it's from the US. So it's a big one. It deals with kids. So that's never good. So there are some stormy conditions ahead, some rocky waves ahead. But if you're able to ride out the rocky waves and ride out the storm and just not jump in this name too fast, dollar cost average over like 6 to 12 months, I think you'll be looking very, very nice after that 6 to 12 months for a nice new uptrend into new all-time highs and even higher, because I do think the company is undervalued at current prices. They're going to have to go through a lot. Sentiment's going to be rocky. Obviously, if you don't know this, a lot of the Mag 7 names are spending. They have massive amounts of CapEx. They keep raising the amount of CapEx, how much money they're spending on the AI build out. They're doing all of this and investors aren't liking it. And also their free cash flows are having to go negative and they're actually having to they're starting to have to borrow money to do all this CapEx that they're doing. So it's like free cash flow is going negative. It's affecting the fundamentals. It's affecting the business, but you just have to understand that this is all short term. These companies know what they're doing. Time and time again, they've invested in themselves and they've come out on the other side better, stronger, and more profitable and making more money. So I believe that they're going to do that again here. And a company like Meta is just a A+ type company, has a massive moat. And I really like the company. Just caveat, there's going to be some storms ahead. There's going to be some rocky waters, and just don't jump into this name too quickly. Dollar cost average on this one and take your time, okay? Because we might see, we're currently at $559 recording this video. We might see low fives or definitely maybe 400s, okay? So again, at the end of this video, we'll talk about where I'm looking at buying this company and where I'm going to continue to add. We have 690, 724, and 795 as our intrinsic and fair values. And so when you look at it, we're looking at about 23 to 42% upside from here. But again, the DCF is talking about them getting slightly back to what they're doing with free cash flow margins right now and EPS very, very similar. So just understand that they have high margins, but it's going to be rocky for a little bit, guys. And then here's Celsius, our last one, Celsius, guys. So a lot of people hate Celsius. A lot of people hate the company, blah, blah, blah. And in the energy drink space, you have basically three companies. You have Monster, which is it's individual company, but like 40% of it is owned by Coca-Cola. So huge distribution, blah, blah, blah. Then you have Red Bull, okay? And then you have Celsius. Those are your three big dogs in the energy drink sector. Now, Celsius uses Pepsi as their distributor in a big, big way. And my kind of thought process here, and like, one, I believe Celsius is going to continue to do good going forward. Two, I believe they have a really nice shot at Pepsi doing what Coca-Cola did and investing a very large amount into Celsius to rival Coca-Cola in the energy drink space. I do believe that's a big, big opportunity there. Or like I believe the downside's capped. This stock has been beaten down. And I do believe the downside's capped to where it's like if they go too much lower, like Pepsi's just going to look at them like a snack and they'll be like, yeah, I want to just buy you out, Celsius, and your brands. And they just purchased the Alani brand, and my wife's been drinking Alani like crazy, right? Not crazy, one a day or one every other day or something like that, but really enjoying the flavors. I took a sip of it, way too fruity for me, but she's really enjoying it. And that Alani brand brought a lot of women who are drinking energy drinks over. And then Celsius is already doing very well with everybody. And I can also see them spinning into like, other brands, right? Like making a more like bigger can Monster rival and stuff like that. Like there's so much stuff they can do once you actually just understand how to make the flavors and the energy drinks. So yeah, I think Celsius can do really good. I think they're at a very attractive price. And like I said, we'll get into in a minute where I'll be buying this company and dollar cost averaging into it. If I do decide to pull the trigger, I'm not invested in them yet. I'm in a trade in them, but I'm not invested in them yet. I'm still doing some research, right? That takes time. And I want to make sure before I go ahead and start getting into this company. I better get going a little bit though, because yeah, it's starting to move to the upside. But analysts have a $43 price target. I ran my conservative numbers, $46, $50. We're talking about 22 to 43% upside from today's price of $35.03. So that's all fine and dandy, Ronnie. Like, okay, the fundamentals are the fundamentals. Like this is what you think about the companies. But where do I actually buy this thing? Where should I be looking to add or start a new position? Let's start at the top, AppLovin. Like I said, here's my DCA Optimizer. It is so simple, guys. It is so simple. Why is a DCA Optimizer even needed? Well, the biggest part about investing is when do I buy? Where do I buy? How much do I buy? Right? And what the DCA Optimizer does is it lets you, the investor, say, I like Celsius or I like AppLovin. I have a lot of conviction in AppLovin, the company and their fundamentals and their growth and their story. And in the management, XYZ. I want to be a shareholder of AppLovin. But you don't want to be buying AppLovin when you got red candles. Red candles is telling you we are very extended and this is the time to trim. Like I said, we went from $3, $10, all the way up to $500, $500, right? And then even up to $743. I don't want to be buying when this thing is super extended. The best times to be buying great stocks is when they're in the mud. They're stuck in the mud. Nobody else wants them, blah, 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 right? So yes, it can be a falling knife, but this is where you DCA, say it with me, DCA, dollar cost average. Not, it's a 4X candle. Let me go all in right here. No. DCA, dollar cost average. Sit there and say, I want to buy every other week or I want to buy once a month. And then all you're going to do is sit there and say, AppLovin's dirt cheap right now I need to be buying 4 times my normal DCA. So if I'm buying $100 a month, I need to be buying $400 a month at this time, at this very oversold level. And then if it goes down again down here and it stays a 4x DCA, that's another $400 you're going to be buying next month. And you're going to continue to do this. And then if it bumps down to a 2x DCA, then obviously you're buying $200 a month. And you can also add on big red days and stuff like that, right? And also let your conviction guide you, okay? So if it's something like Meta and they're going through a lot of, then maybe you want to take 6 to 12 months to build out your 10% Meta position. Sorry about that. It's freaking weird. 10% Meta position. But on AppLovin, it's very beat down. It's at the smart money zone. You got all these targets above. You're at this key support from 2 years ago. And the company is very, very cheap when you look at the fundamentals. So with a company like this at a 4x DCA and this undervalued and at the smart money zone at this strong support, this is where I'm buying weekly or bi-weekly, right? And I'm sitting here saying I'm building my position a lot quicker than 6 to 12 months. I want to build my position in AppLovin in 2 to 4 months, okay? And this is all just based on where we're at with the company. Like, how cheap do you think it is? Like, if you think it's just fair value, then take your time. If you think it's a great opportunity like I do in AppLovin, I'm trying to get my position built out because I think it goes to 600 before it goes to 200, okay? So yes, AppLovin, it is the best DCA optimizer verdict on this entire list, just so you know. 4x DCA, the last time it was a 4x DCA was back here during the 2022 bear market. So let that sink in. The last time it was this cheap and it was saying that we're this oversold and undervalued, really oversold. So this DCA optimizer has nothing to do with investing or valuation or fundamentals. It's all just talking about the chart and how oversold it is, right? And if it's really oversold, the thing is, if it's really oversold and it gets down here, it's just saying this is a great investment. If you think it's a great investment, then by getting in down here and buying more, the more we go down, you're just giving yourself a cheaper cost basis. If you're giving yourself the best cost basis possible and you're super, like, you have high conviction in the company and you really love it for the long term, you want the lowest cost basis. And that's what this does in a very simple manner. It says you find the stock that you really like, you understand the investment, you say you want to be in it, and then just follow the DCA optimizer. You can build out your position, and even these are 1x DCA, so you can be buying up in here, right? Especially as the business changes. But the best time to be buying is when you start getting 3x, 4x DCA. See buy zone, strong buy zone, leap zone, right? And then once you get extended, it's going to tell you like, hey, reduce 5%, man. We're really extended here on the charts. And then as you start seeing that the fundamentals aren't aligning with the stock price anymore, hey, let's trim out some. Let's take some gains and move it into cash or other great opportunities, okay? So AppLovin, guys, it's right here at the smart money zone. It's a 4x DCA. I'm buying heavily here. I'm adding and building my position very, very quickly because I think the next move is going to be up here over time. This is a monthly chart. It's not going to go straight to $1,000 tomorrow. But I believe that there's a great buying opportunity for this company. I think the market has it wrong. Number 2, Reddit. So what do we got here? Well, we have this trend line. This trend line has been holding ever since they IPO'd, as you can see. So buying in down here, especially at a 2x DCA, I really, really like buying here. I like buying at this support level. I like adding and building the position out at a 2x DCA. Not an investment that I'm in yet, but if we stay here, if we're still here and I decide, yeah, this is a good investment, I like it, for the long term, I want to be in this name, which I'm leaning that way right now, going through my research, then I will go ahead and start buying this thing down here and DCAing into it. SoFi. SoFi also at the smart money zone. Like I just said, it was just at 15 bucks not too long ago. Still a 2x DCA, still undervalued. The trim zones are all the way up here with the fib extension levels, 46 up to $64, giving us a very, very nice upside, guys. I mean, we're talking about 3 to 5x here, or 3 to 4x here from where we are right now. So yeah, I like the fundamentals. The DCA Optimizer is telling me to 2x here. Last time we were this cheap, it was telling you to get in down here. If you built this position in the bear market over this basically 12-month period, your cost basis would be somewhere down here, right? Somewhere down here at about $6, and we ran to 33 bucks. So again, it's not some magic tool that's going to tell you the bottoms perfectly. Sometimes it does, but it's more so about if you have conviction in this, this is how you build out a position. Use this tool to build out a position because it's going to help you get the lowest possible cost basis without even having to try, without having to calculate anything, okay? ISRG, like I said, beaten down, okay? Look at this thing. Right out the buy zone, it bounced. And we have a 3x DCA. Now we're at a 2x DCA. Solid point, right? Solid point right here. Have all this support in here that it's bouncing off of. So basically it came back down. It came back down to its previous resistance, broke up, retested. Now it's support. This is support and resistance line. Now right at the 373-ish area, right off the buy zone, smart money zone. Guess what? Buyers came in, they bought it up. No duh. And so next, I think we start retracing back this way because I think the market oversold it. They got too bearish on this name. It happened here. And then what happened next? Up, and away. It happened down here. What happened next? Up, and away. And you're trimming here. And then you can buy more here. You can buy here, right? It's all about getting the best opportunities and entering and starting and building out your positions. Meta. Buy zone, smart money zone is right here. It keeps hitting here. Currently, it's a 2x DCA. It's been a 2x DCA for 3 months now. But like I said, just be careful. I can definitely see it coming down to here. Okay, I can definitely see it coming down to this $400 range to retest this previous resistance, to come down here during all this fear, uncertainty, and doubt, and then have a better opportunity. So for me personally, this is my buy zone. Up in here, I'm just going to continue to DCA over the next 6 to 12 months. Okay. Very simple for me because I know after that 6 to 12 months, right there, baby, right there, 1,000 plus. I don't know it, but that's what I believe they will go because it's such a great company and they're not going to just spend money forever. Last, Celsius, guys, again, came down here to this strong support area. Last time we had all this buying, your cost basis would have been here at 28 and it ran all the way up to 68. It's almost a double up. And now here we are again down here, 3x DCA, 2x DCA, just nibbling in. If you're following the DCA Optimizer, now it's a 1x. Like I said, I'm still doing my research. I wouldn't be mad if we came back down here and hit a 3x, 4x DCA by the time I decide, hey, I want to be invested in this company. If not, it's okay. If I do like it and think it's a great risk reward here and decide to start investing in it, I can also just start 1x DCAing this name. And then if it does pull back, like I said, I can build that position a little bit quicker. So those are the stocks. Those are the stocks I'm buying. Those are the stocks that I'm not buying yet, but that's where I would buy them. And I believe they all are the best opportunities in the market right now based on what I'm seeing out there. Besides them, I don't see like this crazy amount of opportunity. I'm not saying everything's super overvalued. I'm just saying there's a lot of stuff that's fairly valued. I could see why you would buy it. I could see why you wouldn't buy it. And more so just, I think when the markets get like this, you either go after the highest conviction that is beaten down, or you just raise cash and sit on your hands. That's what I think the best play for right now in the market is. And yeah, those are the top buys for me, top opportunities for me in this market right now. Hope you guys enjoyed this. Do me a favor, hit that like button and subscribe so you don't miss any of this content going forward. In the ZEUS weeklies, any of the interviews that I do with CEOs, anything. And I appreciate you and your time and hope you guys have a great and wonderful day. God bless.